Good morning. Welcome to the News Hub. I'm Rolf Winkler. Investors are still concerned about the fiscal cliff, but sellers may be taking a break today after a string of bad days. Meanwhile, China's Communist Party has officially unveiled its new leadership team. Dow Jones' Michael Casey here with a markets report. Up top, Michael, jobless claims.
Yeah, I'm glad you said maybe, because those, just as you were speaking, of course, these numbers
I've written my
out.
intro, and now we get the jobless claims in my ear just now.
439,000, that's a horrible number. I mean, we were looking
horrible.
For 375, which admittedly there was expected to be some pushback from a improved number last week, and we got 355. Of course, this is people filing for uninsurance claims. So obviously, the larger the number, the worse it is as a signal for the labour market. 439 is what we got. Not good, not good. And of course, it comes in the wake of some sort of really, pretty bad days in the stock market in the last couple of weeks.
By the way, let's say, would that have anything to do with Sandy?
That may well, in fact, yes. I haven't actually seen the breakdown, but that may well be a factor. And so, I mean, there's got to be some, seasonal explanation. You don't see numbers jump like that without some sort of external factor. So that's a really good point.
And if that's the case, then you'd see a correction back to something more normal very quickly.
Exactly. You would definitely see a correction back the other way.
But we'll have to dig into the numbers.
Exactly. There's probably some portion of it that can be stripped out to be explained by that. It may be that some of it's part of a trend. It's certainly anomalous, put it that way.
Okay. CPI, by the way, crept up.
0.1%, just really exactly in line with the expectations.
Still no inflation.
No inflation. And that's a global story, really. We're not seeing inflation anywhere, which is why we're seeing central banks just feeling like they can do what they're doing, which is delivering enormous amounts of liquidity and low interest rates.
Because at the end of the day, we've still got such huge, massive credit bubbles that we're deleveraging from.
Deleveraging's still going on. It's just not enough demand. I mean, there really is pent-up demand. I mean, the fiscal cliff and things like this that we'll get onto at some point are a key part of that, because businesses are nervous, not spending, and without that drive, you just don't have the demand effect from inflation.
Mm-hmm.
And so a lot of the commodity price effects have now come through. We've had higher oil prices for some time. They've come off a bit, but whatever you had as an inflationary force from that has already gone. So we're now back at this very benign inflationary.
Okay. Meanwhile, is the fiscal cliff, concerns about the fiscal cliff, is that priced in at this point or not?
It doesn't seem to be, does it? I mean, I would have thought it would have been priced in.
Well, if the market's mixed today, if the market does come in mixed, it's not falling anymore.
It is, but I mean, I would have thought this might have been priced in 6 months ago. I mean, what's happening right now is something that we all knew about. We knew that when we got to the electoral phase,
well, did we know? I mean, did we know? We knew we were going to have to deal with it, but in the past, we've always kind of had these issues where we'd come up on a new year and you'd have to patch the MT, do these kinds of things, and politicians could be counted on to kick the can down the road. This year, we're now talking about, all right, actually, Republicans are probably going to talk to the Democrats, and there's going to be increased revenue.
There's so much more at stake.
We're going to pay more in taxes.
Absolutely, but there's so much more at stake this time, and we knew that 6 months ago than there ever was. But of course, I think people sort of had to wait until the election got out of the way to see what sort of the scenario was. And with the status quo, I think there's a real concern that the kind of gridlock that we've seen in the past is now going to play into this very dangerous environment. And of course, President Obama, in his press conference yesterday, really did not offer very many concessions. He took a very hardline position on his demands, which includes significantly more revenue demands than people expected, which means he's talking about tax hikes.
He's got a big opening bid.
Yeah, it's a big bid, but he's got all the cards right now. I think the Republicans, in many respects, are sort of having to scramble to figure out what went wrong in the election, and I think he's probably placing some bet that they're going to have to cave because they recognise that they may be on the back foot on this issue.
Okay. Meanwhile, over in Europe, markets are down a little bit. They're now officially in recession?
Yes, exactly. In fact, to be honest, the numbers weren't quite as bad as we could have had. This is the GDP data out today out of the major economies. We had a pretty bad number from Holland, but Germany and France actually managed to eke out some gains, and that helped to keep the overall aggregate Eurozone number at minus, I think it was 0.1. So the point is here that we've had two consecutive quarters now of negative growth in the aggregate Eurozone. And this is being dragged down, of course, by Spain, which is in a sort of a death spiral, Greece in an even bigger one, Portugal. Obviously, those peripheral countries that we know about have been in such distress because of the austerity measures they've had to bring in to fight with their debt problems. So that's the real story. The good news in it is that maybe Germany's not doing quite as badly as people had expected, and that's a key driver for the Eurozone.
Meanwhile, Asia, we should get to this. The Communist Party is now finally unveiled officially their new leadership slate.
Right. And actually, there were a few surprises in it to some extent. I think people had expected some more reformist-minded leaders to take part in the Politburo. They stripped it down from a number of 9 to 7. This is the standing committee of the Communist Party that basically runs the country in a committee format. Two of the more reform-minded figures were excluded. Somewhat hardline figures associated with Jiang Zemin, the former.
This, by the way, is the new leadership. There you got
we know that Xi Jinping, the man in front there, is the new president. It's funny, they bring them all out in an order to speak, and that's the order in which we are supposed to understand is the positions they'll be taking, which is why Xi Jinping. No, Xi Jinping is the leader. We're looking now at the other members. We also, but there's this key concern about who will take charge of the economy going forward, and this is a country that is having to face a significant transition. They've got they've got market forces that will have to come to bear if they're ever going to sort of enter into the global international community in the way that they want to. And so,
we will have a lot more on Asia Today. We already had a lot more at 6 a.m. that runs, but it's always on WSJ.com. So be sure to check out Asia Today on WSJ Live. Michael, thanks so much for joining us.
Thank you.